Hey everyone, me Kevin here. I just bought $200,000 of Square because I believe over the next decade, this stock could easily be a 10x opportunity. Now, at first, I have to say, when I thought about Square, I'm like, seriously? Like, just that little terminal in the store that you see? But when I started going a little deeper and realizing how deep this like octopus of a monster in the fintech space is growing, I started realizing, oh my gosh, maybe Bloomberg is right. Maybe they are going to 10x. So let's go deep on what's going on at Square. Just a heads up, this took like 7 hours to put together, not even film it, just to put together. So let's, hopefully you enjoy this. If you do, consider sharing it and subscribing. But I do want to give a fair warning. After I buy a stock, it tends to crash shortly thereafter, so everyone can make fun of me for 2 to 3 months. But then after a few months, I tend to end up coming out ahead. But if you could time it a little bit better, do consider paying attention to this stock. Just to name a few of the recent winners: Etsy, a triple. Lemonade, a double. Redfin, a 5x. That was a good one. That was a sneaky one when it dropped down to $10. Apple, EXPI, Peloton, 3-banger. These are all winners. Neo, obviously Tesla. But in this video, we're gonna break down Square. Just a heads up, I do also share all of my purchases and talk to you about my ideas before I make purchases in the course on stocks and the psychology of money. So if you want to learn how to build your wealth, make sure you check out the programs down below on stocks and real estate. Email me for a bundle at kevin@mekevin.com. There is a holiday sale going on that does end Christmas evening. So Square is a fintech that is about to turn into a mega banking Goliath. If you're thinking about buying Square, know that Square believes in a revolution coming for digital and cashless payments, both in-store and online. They're big online players as well, so Shopify, watch out. They also believe that Bitcoin will be the native currency of the internet, saying that Bitcoin provides a way for the world to participate in a global monetary system. They also offer Bitcoin purchases through Cash App. They accept payments through Bitcoin through their websites and services through their merchants. They offer instant payouts to their business customers for payrolls and other withdrawals. They have 2.5 million people on Cash App buying stocks on Cash App, which I have to say, I have used their Cash App before. I've done very well. In fact, if you take a look at what I've got on screen here, you'll see that I've returned 65% on all the money I invested into stocks through Cash App. So I have to say, Cash App, y'all did me well when I tried your stock platform. Thank you. Anyway, realistically, they are touching everything. They've got an omni-channel that allows people to basically fight Shopify and Amazon, huge competitors, by the way, for Square, by taking their brick and mortar business online, all through their cloud systems. They're also about to dump $850 million in the next year into go-to-market investments for better products, scaling, automation, machine learning. Basically, they've taken all their money and thrown it into the fire pit that is called research and development and investing into their company. So if you like Shopify, you like Chase, you like PayPal, you like Robinhood, you're gonna love Square. Except Square is probably gonna need the next decade to really be that Goliath that it looks like it might end up being. See, to me, Square is kind of like the Tesla of finance. You know, Tesla, ooh, we're gonna make cars, so why don't we make the machine that makes the cars? And the cars are gonna use batteries, so let's get into making batteries better than anybody else has made batteries. Batteries use electricity, so let's get into solar roofs, and energy storage, and, well, energy farms for even cities and industries, which is crazy. And cars need to be insured, and this one trips me up, okay? And I know we're supposed to be talking about Square here, but this is the kind of innovativeness that I think Square is kind of on the same track of, but this one's ridiculous, okay? Think about this. Tesla makes you pay them to insure your Tesla, to get car insurance, right? But Tesla is really Tesla's automotive product, right? In the future, it'll be self-driving, but Tesla is collecting insurance revenue for basically you using their autonomy system, which seems really crazy. It seems like it should be the other way around. Like, here's our product, we need insurance on it. Yeah, no, it's crazy. But the point is, this kind of tentacle approach to taking every aspect that they touch into their business in-house and making it better, which is what Tesla does, is kind of what Square does in money and banking. I like that. I like that a lot. The reason I like it so much is because when you figure out how to maximize on the efficiencies at every layer, you can get your margin up And when you get your margin up, you make lots of profit down to the bottom line. Even if it's just 1% here or there, that's something that Tesla and Square do. And that's not something that some competitors do. All right, let's go ahead and get a little bit deeper into Square. So Square started out, obviously, with these guys on screen here. You know, we've all seen this before, the Square terminals, the little cashless terminals over here, and there's been a lot of competition. This right here is basically what Fiserv has released. They are the old school point of sale transaction sort of software, and they basically, it looks like straight up copied Square. To come out with the same kind of product. And I always like to look at what the competition is doing, because it's like, wait a minute, like, is the competition going in the same direction as Square, or are they going in a different direction? In this case, they're literally trying to copy Square, which is good because it's sort of, what do we say? That the best form of flattery is imitation, right? Copying somebody. It's a good sign that when old school payment processors are getting into what Square is doing with, you know, Fiserv's new product called Clover, that's a good sign that what Square is doing is right. But the big benefit that Square has is getting business into e-commerce and the from the ground built up brick and mortar e-commerce combination system that Square has. And I'm simplifying a little bit here, but think about what's so important if you're a business owner, because maybe you're watching this and you don't own a business. You don't own a store that people can go to, or maybe you do, and then it'll make a little bit more sense, but we'll keep it very simple here. If you sell stuff in your store, it's important to be able to sell the same stuff online. That's a no-brainer, right? But a lot of businesses suffer from the fact that they might have two inventory systems. And this is why when you order crap from Lowe's, it's like, dude, it says there are 4 in stock, and you go to the store and there are none, and it's like, oh, I want to pull my hair out. Well, Square solves that because it's one platform. It's the same platform you're using in the store as you're using online. And this is how Square competes with Amazon and Shopify. A lot of us know that Shopify, you know, the good old Shopify dropshipping stores you can start up right away. Square does the same thing. If you want to start a website to sell a product, you could do it on Square just like you can do it on Shopify. The beauty about Square is you can integrate your in-person brick and mortar business with Square's system with the most ease. Now, in fairness, Shopify is starting to do this as well and is competing with Square in the space. Most of the business reviews that I've found suggest that if you have an in-person store, a brick and mortar store, Square is probably going to be your favorite over Shopify, but Shopify is trying to compete in this space. So you gotta know that Square's got a lot of competition because it's lucrative. After all, after COVID, Bloomberg Intelligence found that Square's online volume increased 5x. Now, since we are comparing Shopify and Square, it helps to go ahead and compare their websites to see, who's getting more attention at the moment, Shopify or Square, for potentially new signups. And we can kind of see this same fall after March and into May here. But what's fascinating is when we compare Shopify to Square, which Shopify has definitely a more established position for e-commerce than Square does. You can see their growth has really just started this year. So you've almost got a little bit of that startup nature for that e-commerce platform competition here. Look at what's happening here in the last few months of the year. You have Square as the yellow line gaining ground on their website analytics, where Shopify is actually leveling off and sort of S-curving down, which is not so great. If we look at the global ranks, we can see Shopify is well ahead of Square with a global rank of 688 compared to 1281 for Square Up, which directs, if you type in square.com, you go to Square Up as well, same thing. But Square here is gaining rank, and they're gaining reach, they're gaining page views, and when we look at the actual page time or sort of time on website, we see the same kind of growth happening at Square and that same sort of decline happening over at Shopify. Now, this isn't to say that Shopify is bad. I love Shopify and I invest in Shopify, but right now we're focused on Square, and I like seeing growth. In fact, the only reason you would buy Square is to make sure that you're able to maximize growth at this company. Now look, the fintech, the banking, the payment transaction space is super competitive. Right now, Square only has 3% penetration in, for example, the merchant market, which is actually neat because it gives them endless room to grow. We're not talking about trying to be a winner take all here. We're talking about trying to go from 3% to 6% to maybe 9% and extrapolating revenue from there, especially since we're expecting many, many, many more e-commerce transactions going forward here. We all hear that COVID has really accelerated e-commerce. We're going to see more of that. Fortunately, Square's got their revenue. This is sort of their revenue projection for the next 10 years. This is per Bloomberg. And so right now, Square has revenue of around $8.8 billion. Bloomberg estimates that their revenue in the future could be as high as $85 billion within the next 10 years. And of that, $39 billion would come from transaction revenue. 30 billion could come from software, getting businesses from brick and mortar online and getting those online subscriptions going for businesses to operate their website through Square. Huge. Actually, Bloomberg thinks the Square Capital, the lending division, could be a $12 billion sector alone. And the financial services sector, this would be like credit cards and debit cards, could be another $5 billion industry. So you're looking at some massive potential growth here, especially as a company that only has $8.8 billion in revenue right now. And when I say only has $8.8 billion, don't get me wrong, it's already a huge business. They have a market cap of over $100 billion. This is not a small, up-and-comer, tattoo chef with a $1.2 billion market cap. No, this is 100x that size, right? So this is a big company. It's oftentimes, because it's so large already, seen as maybe potentially a safer play, not as quick to double as, let's say, a SPAC stock, but something maybe you can throw more money into because maybe you have less risk, but then again, who knows? Every time I buy something, it plummets right afterwards. So let's just put that out there. I don't know. This is the Kevin Luck. So anyway, let's talk a little bit more about some other things that Square does, and then we'll get into the financial analysis. So Square also offers business debit cards, which the fascinating thing about Square is they are masters at getting you to purchase all of the other vehicles that they have or options they have. It's kind of like Tesla. Hey, get our insurance, get our solar panels, get our battery. When you get a car, you want the other things. They do that as well. Hey, business customers, do you want instant payouts? Well, we'll have a fee for that. You want to use the terminal in store? We got that for you, but we got a fee for it. You want a website? Sure, but we got a fee for that. Hey, we got these debit cards that you can use. Hey, every time you swipe the debit card might be free, but there's a transaction fee in the background that Square gets to make money from. And the more you use this, the more likely you are to go over and use the free Cash App transfer app where you can transfer money to people for free. Which what's crazy is Square says that 55% of users on Cash App are monetized in some way or another. Even though it's a free payment transfer app, the more you use Square products like Cash App or the other products, the more you're actually using these free services they actually make money from. They make money when you buy stocks through their platform. They make money when you want to do an instant transfer to your bank account to instantly get your money released from Cash App if you needed to, or ideally you just leave the money sitting in Cash App and then guess what? They make money on the fact that you're leaving money in their platform. In fact, Square is going so tentacle crazy that they're actually planning on opening a bank next year. They already got their charter in Utah, or Square is going to have their own bank, which is going to open the door to high yield savings. It's going to open the door to credit cards. Need a business loan? They've already got Square Capital. That's a business that has been growing 42% annually since 2014. They even recently tried to buy Credit Karma so they could get into tax prep services until Intuit decided to beat Square to it. But it just goes to show, this company is freaking everywhere. Look, before we get into the financials, let me just take a pause here and ask you, did you realize all this stuff at Square? I mean, maybe if you're a business owner and you use them, but if you're like me, you may not even realize that Cash App is owned by Square. You may have just thought Square, like seriously, like just the company you swipe your card at, or you do the contactless Apple Pay in the store and that's it. Like I'm buying into the small business and that's it. No, like it's so much more than that. It's really a Shopify competitor. It's a JP Morgan Chase competitor. It's a Robinhood competitor with their stock platform. You can even buy Bitcoin on there, which also competes with Robinhood. And don't get me wrong, I gotta make this very, very clear because I had a comment on this from a course member. I appreciate all your comments. I always try to integrate your comments and questions into my videos and even our live streams in the morning. But one of the questions was, wait, is Square a Bitcoin play? No. You're gonna see that when we get into the financials. Square is not a Bitcoin play. Bitcoin is a play to get people into Cash App if you want to buy Bitcoin. Bitcoin is a way where people could check out for products through Square, but Square doesn't care how you pay or what you do. They want to charge you for the fact that you're doing something. Square makes money through transactions and subscriptions, not Bitcoin. But the more people use Bitcoin on Square, for example, the more they're likely to use the other features, which might end up making Square money. So let's go ahead and hit some revenue projections for Square. There is so much to talk about with Square. It's almost hard to keep my head on straight with this company because it's really an amazing company. It's kind of overwhelming. Jack Dorsey, obviously created this company. He runs Twitter or founded Twitter as well. I know a lot of people don't love Twitter. I'm just kind of throwing that out there as well. This is another sort of brainchild of his, but phenomenal company. I mean, if you're talking about keeping people... See, one thing that I liked is Twitter's goal, much like YouTube, is keeping people on their platform longer and using it more, right? The more you're on their platform, the more active you are on a daily basis, the more actions you do on the website. Well, if you sort of transfer that same knowledge over to what you've got at Square and Cash App, you're trying to do the same thing. You're trying to get people coming back and back and back. They were actually huge beneficiaries of the stimulus rush from the CARES Act. And I think they will be huge beneficiaries of the next stimulus rounds as well, because people threw all this money, especially the unbanked and the younger generations, threw their money into Cash App, and the money's sitting there. Square gets to make interest money off that. Then they start putting money into stocks. Now they've already got 2.5 million users using stock trades with Cash App, but you're getting people into all these other verticals at the company. That's where they're making money. All right, so I'm gonna give it to you straight on these financials here. We need growth. This is a growth company. Without growth, this company sucks. Do not invest in this company. We need transactional growth and subscription growth. That's where the money is. So I'm going through these crazy complicated spreadsheets just to show you the good stuff that you gotta pay attention to. This is what you wanna pay attention to right here. See that 27-ish%? That's transactional revenue. We got to see that growth go up. That's the 2021 estimate. We need to see this up, 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 up. We had terrible transactional revenue at the beginning of 2020 because of, pandemic. But previously, we had seen these growth rates of 31%, 28%, 24%. So give or take around 27%. If we could get to 30%, even better. If they continue to sort of tentacle expand and we get this explosion in e-commerce, which they might be able to ride on for transactional revenue, would be very, very good. Then the subscription service, exponential growth, where it looks like we're probably balancing around this 44 to 55% growth. These are kind of Shopify numbers here, getting that e-commerce growth, very, very important. Which when you're thinking transactions, I really want you to think the more Bitcoin goes up, the more people are using the app because they're like, I gotta get in, buy and sell. Transactions, money, right? That's what we want to see. Oh, I want to instant deposit my money from Cash App to a different bank or whatever. Fee. That's money. That's what's going to help Cash App. This is one of the reasons Cash App is actually ranking higher in the app stores these days, the Android and Apple app stores, than PayPal is. We've got more growth in terms of amount of downloads. This is good, because it all leads to more transactions. So the other thing, so those two things, very important. Transactional revenue growth. Every time a debit card gets swiped, every time they check out, every time somebody pays with Bitcoin. It doesn't matter about the value of crypto. What matters is the transactional revenue. And then what we need is margin on those. So if we go down the spreadsheet over here, we're going to see the actual margin on their subscription services and the margin on their transactional services. So we'll go ahead and slide over a little bit. Going forward, we are expecting a 15% expense margin on their subscriptions and about a 58% expense margin on their transactions. So we want to see these cost margins go down. And we can see these have actually been pretty consistent. Transactional costs have been around 58%, 62%, 63%, 64%. So they've declined over time, which is good. This would be 2020 right here. This is 2021 estimate. Then the actual costs for subscriptions have been declining. And this makes sense because when you have this built up, it becomes cheaper over time as your company grows. So when we do our projections, these are going to become very important. So here are some 2025 guesstimates. And these numbers, we're going to play with these in just a moment in the spreadsheet as well. These are just going to be still images here. But this is a very simplified spreadsheet. And so what I did is I said, and I assumed a little bit high. I should have probably not done this. I should have probably gone with like 25% over here. So we'll make that adjustment in a moment. But I went with a 30% growth assumed for transactional revenue, 45% growth assumed for subscriptions. Now this is also risky because a lot of things can screw that growth up. And I'm talking 5 years here. This is, it is a growth company. That's what you're buying here. There's no kidding that, or no getting around that, so to speak. Hardware, we could assume 30% growth. Bitcoin, we could assume 30% growth in this actual transactional revenue portion, right? Transactional costs. So this is where they're gonna make big money. If they can get the marginal cost down on their transaction, that's great. Right now, we saw they're around 58%. If we can get this down to 55% over the next 5 years, much better. Subscription costs, this should go down even more than 13%. I feel like I'm being conservative here. We're probably gonna have to be a little careful on the 55% and the 30% over here. So we'll double check that and we'll go into the spreadsheet and play with it a little bit. For hardware costs a lot of money. It loses them money. They're basically giving these things away. They're losing money on hardware, and they're pretty much losing money on Bitcoin. I mean, they make 2% on Bitcoin. It's worthless. 98% costs. Bad. Gross profit margin usually around 30 to 34%. So we'll see if we can get them up over the next 5 years. Usually, as the company expands, they get more efficient. You get to scale. This makes sense. So we would expect that over the next 5 years, they should be able to get more efficient and get some of these costs down. We'll see though, because they might not have complete control over all the transactional costs. Then these are pretty typical expenses here: product development, sales and marketing, G&A, general and administration. Usually they're around 40%. Would not be a surprise, though, as their revenues expand, to see them get down closer to that 25 to 28%. When we consider all of this after 5 years, we get a potential earnings per share in the future in 2025 of somewhere around $4.55, which in my opinion, if they were even valued at still the beginning of the growth phase, if they were valued then at 100 times earnings, this stock should double. But this is the boring part. Why is this boring? Because the stock should do way more than that. The stock should 10x. And that's because we're on this right now. Here's your typical S-curve, little crooked S-curve. In my opinion, when it comes to Square, we are here. This is where we stand in terms of Square's growth. 2025 is probably somewhere around here. And this turn might be somewhere around 2030. So by stopping my analysis 5 years in, I think we're really missing the real growth that could come by 2030. And that's what Bloomberg showed us. Earlier, Bloomberg showed us via their projections. This is Bloomberg's intelligence. They think we can go from 8.8 billion to 85 billion. Well, in the projection that I have, when we jump over to the 2025 estimate, we've only got their revenue at 42 billion. So they think the revenue could double even beyond what we did here in the 2025 estimate. If it does that, we could see some substantially different numbers. In fact, what I did is I pulled my numbers to 2028 and I go a little bit beyond that 88 billion. I go over to 103. It's just because how the numbers extrapolated. If we use all of the same metrics that we had in the prior slide, Square could have earnings of somewhere around $28 a share by the end of 2028. Now, who knows, but they could if we continue to see this growth, certainly before the growth slows on that S-curve. If that's the case, and they only sold at a 50 times multiple then, this could be a $1,400 stock in a matter of 8 years. Which if this is a $1,400 stock in 8 years, that would be like making a return on your money by investing into this company today of around 43%. That's 43% every single year, compounded growth. If their revenue 10x's over 8 years and they hit those margins. Lots of ifs. Growth company, big question mark. See, if I go back to the old spreadsheet, we'll actually see that if we project out to 2025, we only have about a 14% growth on our stock investing into this company. So the larger earnings potential really comes from this company probably between 2025 and 2028. So this is why I'm saying by investing in this company, you're really picking up this early phase of the S-curve. The problem is the stock market, like if we get to 2023, the stock market will be like, oh my gosh, this company is exploding like this, and it could start valuing out. And this stock could be $400, $500, $600, $700, $800 well before these targets. That's the crazy thing about the stock market, because the stock market's always trying to look ahead. This is why I'm looking at this company. Is this something to invest in now? So now what I want to do is I want to go a little bearish on this company, okay? Instead of going with a 30% growth rate for transactional revenue, let's go 23%. And instead of subscriptions growing at 55% or even 45% or some of these other growth rates we've seen in the past, we're just gonna go to 42%. And my goal is to get this company to the brink. Like, where do I not lose money on this company? That's the goal. These are still big growths, right? It tells us this is a growth company. If you do not believe that Square is going to grow, do not invest in this company. Because right here, these numbers are gonna take us to the brink. So what I did is I went bear on this and I said, they are not going to get their transactional revenue up 30%. We're gonna go 23%. Subscriptions 42%, and we're not gonna get the margin improvement on transactions. It's still gonna cost 58%. Those are big changes from what we had before. Remember, our first analysis on this over here was 30% assumed, 45%, and getting this cost down to 55%. So we're going bear mode here, and we're not even going like super bear mode on this, okay? So it is implying that we need some big growth. If this happens, this bear case scenario happens, and this thing trades for 100 times earnings, then it's probably not going to move the stock at all over the next 5 years. That is, we would have a measly 0.65% return on the stock. I don't think we're going to see these numbers. I don't think we're not going to see margin improve on transactions. I don't think we're not going to see the growth we're expecting at Square. I think we might actually get pleasantly surprised. Square has beat their expectations 7 out of 8 of their last earnings reports. In fact, Wall Street has 26 buy ratings on this, 15 holds, and only 5 sells. So overall, it seems like there's enthusiasm that, you know what, Square could be this Goliath that we think it will be. It is going to require a lot of growth though. So bottom line, if you're looking to invest your money into an e-commerce growth company that's going to take market share in banking, in stocks, in crypto transactions, take market share from Shopify, certainly take those in-person transactions. If you're looking for somebody who's going to steal market share in that and continue to grow with the space that's exploding, Square might be it. I put this S-curve on screen here because, again, I really think Square is somewhere over here. And in the next 5 years, we'll probably be somewhere over here. That is, we'll still have epic growth ahead before we get to that slowdown phase where we probably start seeing Square get valued closer to, you know, like a PayPal today, where you're getting to these 40 to 50 times earnings. I don't think we're going to see Square end up getting valued like a bank because it's so much more than a bank. So I would expect in the long run, 40, 50 times earnings, totally reasonable to pay for this company come 2028, 2030. Right now, I mean, the company's losing money, so you're paying an infinite amount. But projecting forward, paying 100 times earnings for a company like this totally makes sense to do. Would not be surprised to see that stay consistent, and that's going to be something that, you know, if we see the growth, could 10x this stock. So pay attention to the growth. I told you exactly what you got to look for, and write these things down. If you're thinking about investing in this company, specifically write down the following. We need transactional growth rate. We want to see it being certainly above 25%. Subscription growth rate, that's a big one, okay? That's a big segment because they're competing with Shopify. We got to see that be above 40, 45%. That's a lot to ask for, but I think they can do it. We'll see. Transaction revenues, we want to see, and margin, we want to see that stay improved. Certainly subscription margin, we want to see that up. Those are going to be the things that define Square. So if you're thinking about investing in Square, and you like what you see, invest in Square. If it makes you nervous, you don't think they're going to hit those growth targets, stay away from Square. Pure growth company over here. And those are your risk factors to keep in mind as well. Now, just for full transparency, I have invested about $200,000 into Square in just the last 24 hours. That does put me somewhere around $250,000 to $300,000 invested into Square. I don't mind building out this position a little bit more, so I'm open to adding to this position, especially if we see any kind of drop. I'll probably continue to add to Square. I do think Square is going to be a good beneficiary of the stimulus checks going out, bringing more customers potentially to Square. So we'll see how their growth grows. But hey, it all comes down to that. If we miss on growth, this one, not gonna do well. But if they hit the growth, this one could be a nice play, and I'm excited for it. Thanks so much for watching, and we'll see you next time.